LeafSpace has an innovative approach to ground segment service. They're rethinking the way space missions are run by building both infrastructure on Earth, and they combine it with a cloud engine, which they call network cloud engine. The big problem in the space industry is that missions usually have very high non-recurring engineering expenses. And SpaceLeaf, by applying the as-a-service logic, basically what they do, they optimize space operation cost across various missions, and therefore they make infrastructure way more accessible. Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Welcome back to another exciting episode of the Week in Italian Startup. I'm your host Giacomo, here with Nicolò, and we're thrilled to be here to bring you the latest news and updates from the ever-evolving Italian tech ecosystem. How are you, Nick?
I'm great, thank you very much. How are you, Jack?
Very good. Thank you. So let's jump right in, talking about LeafSpace raising 20 million in Series B funding. So let's talk a little bit more about what LeafSpace is doing. So LeafSpace has an innovative approach to ground segment service, which they sort of for the first time, I believe, call it GSaaS. So taking a little bit the SaaS model and applying it to space. So what they're doing is they're rethinking the way space missions are run by building both infrastructure on Earth, and they combine it with a cloud engine, which they call network cloud engine. So the big problem in the space industry is that missions usually have very high non-recurring engineering expenses, what they call NRE. And this is basically limiting a barrier to the new entrants in the space economy. So SpaceLeaf, by applying the as-a-service logic, basically what they do, they optimize space operation cost across various missions, and therefore they make infrastructure way more accessible. So basically they have 19 ground stations, 3 unique solutions, 3 products, basically tailored to different needs of the space industry. And the idea is really to think differently with satellite connectivity and operation. They have a network of 80 satellites, and they have like a bunch of locations around Europe, and opening way more in different locations. So I was very impressed by the sort of the thinking by analogy, sort of core of the company, essentially making clouded infrastructure and lowering cost, and basically supporting the whole like a space economy from the infrastructure perspective. What's your take, Nick, on that?
Well, you said it. It's a very interesting startup out of Italy. So let's remember that Italy is a strong economy in terms of space, because we do cover the entire end-to-end infrastructure, from launch to technology, and is an example of physical infrastructure starting from Italy. I have to add that Primo, the space team, was not one of the first investors, but one of the main investors in the previous rounds. And we're very happy that new investors are joining this growth stage, the new growth phase actually of the company. So we need to invest a lot. There is a lot of hardware involved here. You really need to be the physical ground station across the globe in order to support your customers. Very nice. And something that you don't immediately think of when you think about space, right? So you think, I need a satellite. And you think about building a satellite, launching a satellite, and then something is up there and you say, okay, what now? Now LeafSpace.
100%. It's a good combo also, like infrastructure, tech, plus the cloud part. So it's very interesting play on both sides. And anything that is an enabler of different possible new markets, it's very powerful. So the SaaS model is basically taken, upgraded, and applied to space economy. So that's very interesting for sure. To mention maybe some other investors, so other investors include CDP Venture Capital, Neva SGR, Red Seed Ventures, also like an investment firm, an Italian investment firm, and then YSOL Investments, which also is a private investment firm focusing on energy transition and digital transformation. What is really cool also is that European Investment Bank is extremely active, and that kind of shows specifically on this deal. Essentially, they made about 50 million euro venture loan available also to the company. So great financial boost, great deal, great possibilities for sure. Awesome. So next up, exciting news from the e-commerce sector. 1000Farmacie, 1000Farmacie, a promising e-commerce startup, has secured a 10 million extension to its Series A round. So very interesting because basically they executed very well and kind of rethought of what kind of an old model of the pharmacy in Italy is basically run by local small stores. They basically disrupted it by basically giving one of the most efficient e-commerce platform for pharmacies. And what is interesting is also that there is a lot of interesting investor, including Italian P101, I believe in the earlier round, especially in the late seed sort of round. Other investors include HPM Healthcare, which is essentially a very, very big biotech healthcare investor from Switzerland. I think they have around 2 billion under management. So the idea here, which I thought was that the good thing of 1000Farmacie is that they're kind of benefiting from biotech and healthcare investor, which are used to like huge number of like rounds when it comes to like Series A and B. And actually, you know, when it comes to developing drugs or patenting like some like health technology, and basically they're like benefiting from that. They're big guys with the big muscles, and this definitely helps when it comes to closing like deals like this, which probably in their eyes is they're kind of smaller actually. So that can be interesting to notice. What's your take on that, Nick?
Yeah, I agree with you. This is probably some exploratory investment in order to see what's next with the company. I have to say, from the article, for example, 1000Farmacie started out by being basically an e-commerce aggregator for parapharmaceuticals, not real drugs, but all the cosmetics and non-pure drug, non-prescription drugs, basically online purchase. From the article, their goal is to expand the platform to cover all the services related to pharmacies. So there is let's say, what I'm seeing is a TAM expansion. So you move from a specific market to all the sites market in order to expand your offering and to expand the amount of business that you can or that you want to intercept through the platform. So this, it's like a new growth step for the company. So it's all to come. I think it's something quite powerful, and looking at the investors is something that they have been, believing in. So very interesting.
Awesome. All right, let's talk about Quince Therapeutics acquiring EryDel SpA for one deal, which is probably one of the biggest we've seen this year in terms of cash acquisition money. So let's maybe talk about that. Potentially, exactly. Let's explain a little bit the deal. Yeah, very interesting.
So I'll go. Well, basically, EryDel is a biotech company, and they are developing. Remember, biotech is not my field of expertise, but basically they are developing a drug for a rare pediatric disease with no existing treatment today. So a very niche but interesting and important type of research. And they've been acquired by Quince. I don't know the Quince Therapeutics, a listed company that basically acquire and operate drugs and innovative drugs. It's a all shares deal for now. I believe the existing shareholders of EryDel are receiving like 16% of the overall King's cap table, and there's a cash plan related to milestone achievements, starting from completing regulation to get into testing, and finally getting to commercialization of the drug. And from the article, the total can amount to up to $485 million. So,
wow,
quite a considerable amount of money.
Interesting. And the logic of the milestone, that's also something, that's kind of the where the probabilistic part relies on. So there is a bunch of milestones essentially, and before actually they can close completely the deals, the company needs to actually like hit those milestones, including a patent approval and other like sort of like hoops that they need to jump through to actually like make sure that the deal get closed. Interesting. I would be very curious to see the length of negotiation to actually define those kind of milestones for such a huge amount of money, and how long it would have taken actually, and the effort done. So I don't think this is like a 1 week deal. That's probably years in the making, or at least probably like a bunch of time. I don't know what is your take on that, but yeah, I would be very curious to see how it works.
Well, I have no idea, but my feeling is that this is not completely unusual in the biotech market. So when you're talking about innovative drugs and new drugs, so maybe the parties know how it works, and probably it took time to negotiate, but not about the process, but about the amounts. So how much shares up front, how much money related to
Good point.
the milestone. So for sure it took time, but I believe the structure per se is not something unusual for that kind of market, because the acquirer is getting a lot of risk, because maybe the patent might not be granted, the regulatory might not be completed, the research might not work, you don't know. But still, that's probably no easy feat, that's for sure.
Interesting. All right, turning our attention to the investment landscape, FITEC 2 growth stage fund managed by Fondo Italiano di Investimento announced the first closing of its fund at an impressive 137 million euro. And this fund is set to play a crucial role in fostering the growth of innovative startups across various sectors in the Italian ecosystem. So it's not just specific, Fondo Italiano has been very active. FITEC 1 in particular sort of included a few very interesting companies that we talked about in the past, and some of them actually went public as well during their lifetime. So very interesting for sure, and seem like they have a solid sort of picking mechanism that allows them to actually find a very interesting deal that can be potentially very, very successful.
Yeah, in this case, they are a late stage investor, so a growth stage investor to be precise. So they tend to cover rounds beyond the Series A, so Series B onwards, up to pre-IPO rounds. So that's a completely different stage. So something that we really need in Italy. And in the first fund, I think they did well. They picked the very good investments, the good companies. That from here, most of the results are still to be taken home. But still, this is very good news because we have a new late stage investors in the market. We focus on Italy, by the way.
Yeah. Just to mention a few, actually, if people can check also the LinkedIn post in Fondo Italiano di Investimento SGR, SECO SPA, just to mention a few. Healthware Group, which by the way, it's one of the investor in 1000Farmacie, so it kind of connects right now in last week in particular. And then, Everly, Be My Eye, also like companies that we mentioned in our previous episodes. So definitely like very interesting companies that they've been like doing relatively well. Fantastic. All right. In an exciting collaboration, Mediobanca and Founders Factory have joined forces to invest in fintech. So Mediobanca contributing 12 million euro in capital. The joint venture aims at supporting very emerging tech in Italy, including AI and blockchain, but not limited to that. And Founders Factory, very, very interesting player from the UK ecosystem. Basically, they are trying to expand essentially like internationally, and they have like they're very well placed in different countries. So it's an interesting combo actually. Mediobanca, we don't hear Mediobanca too much in itself to actually do early stage or VC investments as Mediobanca. So there was kind of like caught my attention as well. Like that's interesting, and of course the joint venture can be extremely beneficial to them.
I'm nothing to add here. So I mean, it's good to see players investing in the market. I mean, Founders Factory is a UK operator. I understand fintech is very strong in the UK as a market for sure. I'd rather see a bit more Italian action, but still, it's good to see more capital enter the market with a very good operator, because Founders Factory is an extremely good operator. So good choice by Mediobanca.
Awesome. That's cool. And we didn't see like much joint ventures actually. Usually banks, they either tend to invest off balance sheet or through their own like vehicles, or through their own like setting up their VC firm, their VC fund, like San Paolo. Sabina, I'm not sure how they move our favorites in the market. I don't know exactly, but yeah, it's not many joint ventures in general. I'm sure that
I think a few of them happened below the radars. For example, Digital Magics closed a couple of joint ventures. One recently with Tinexta, but similar to the one with Tinexta, I think they closed one with Intesa, I believe. So a bank to do the same, to invest in the fintech market. So they are not deploying huge amount of money. They are in the range 5, 10, 15 million euros. But they do happen. Probably not as often as you might think, but they do happen.
Yeah. I would also mention maybe plug and play. Sometimes you find like a project between like big banks and plug and play, which is of course one of the biggest player. Very early stage. They sound a lot like proof of concept sort of ideas, less from the sort of investment, I would say, perspective, but more as a testing of markets. So that's probably the angle, which again, it's something that corporations, not only in the finance sector, do, which is essentially using lean and a quick startup to actually like deploy a product really quick and see how it goes. And these platforms are perfect for that.
Yeah, that's a very fair point. I mean, if you zoom out, you see a lot of that happening with accelerators. Plug and Play is one, and they operate a lot with a lot of companies, a lot of enterprises, and a lot of verticals, including banks and insurance companies. Startup Bootcamp used to make the same, and probably is doing the same today. So they tend to launch vertical accelerators with corporate partners that are investing and applying capital into the program. So that's happening a lot. Maybe the joint venturing is something more unusual, if you want.
Interesting. All right, let's talk about Getir. International news. Getir, a well-known player in the on-demand delivery space, exiting from the Italian and the Portuguese market. So basically, quick on-demand delivery kind of started flourish in a very specific situation during COVID. Essentially, a lot of players came out, Gorillas to be one in particular that had a lot of buzz, and then sort of retreating back. Getir is another one, very, very sort of ingrained. You can see, in Italy, in Milan, in some big cities, kind of like running around. So it happened, and it definitely was deployed. People start using it, but culturally, again, this dynamic didn't seem to pick up. and to actually remain. So maybe definitely like fill a void during a very specific time, but once the void is filled, then the culture seems like too strong. So the market really contracted. Getir is basically retreating to the big markets. So Italy and Portugal were never the big sort of markets for them. They're focusing mostly on US, UK, and some big cities in France and Germany, which maybe that's probably where it makes more sense, to be honest with you. So, I mean, I get it. I get the expansion, but sometimes, culture is more powerful than tech, and the market is just not ready. So here's another example of that.
Yeah, I agree with you. So blitzscaling doesn't always work. In particular, in this case, where you have very important running costs, this is not software. You're moving stuff around, and you need to create stuff. You need to manage warehouses, even though they are, dark stores, but they are still warehouses with stuff that rots, stuff that you need to turn around. Yeah, that's expensive. And they just said after the COVID, the market reverted to the historical mean. I mean, commerce
good point.
is still growing, but people just, went back mostly to their habits. So the playbook, the blitzscaling playbook didn't work out. I mean, that's okay. For some time we had VC funded deliveries to our homes, and then thanks VCs, but, so long. Thanks for all the fish.
Exactly.
It happened. It was a difficult market. So economics are very, 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 very difficult when you move groceries around. We do know, being investors in Cortelia, but
and maybe one other thought that we can discuss is points of diminishing return. So quicker is not necessarily always better. So we started with e-commerce taking weeks to deliver a product. Then we arrived in days with Amazon, and people are happy about it. But less than a day, people maybe don't need that. Is maybe even too much. So maybe there is a point of diminishing return where maybe the day or the couple of day delivery, people are happy, they accept it, and quicker is not necessarily better. And maybe that's when culture enters, and companies that are trying to do something even quicker, they're not succeeding, because then it's like they miss the sweet spot. So yeah, it's interesting to see this dynamic.
This is a very nice point that you point out. If I may add just one bit, one of the things that one of the error that you might incur is you think that a family on average they spend like 150 euros per week on groceries, and you think, wow, that's my time. That's right, but it's one thing if you deliver 100 euros in one run, or do you think that every half an hour you send some milk and 2 eggs to a person? So the cost of operating 1 milk and 2 eggs is probably higher than the margin that you take home from selling the milk and 2 eggs. So probably the value proposition of the half an hour delivery doesn't work unless you get to enormous volumes, because there is no economic sustainability of delivering 1 milk and 2 eggs, and there will never be one.
100%. And add another element, which is consumers are becoming smarter and more sensitive to actually sustainable product and services. Wow. So if you add that, where Gen Z and Gen Alpha and even us millennial, they're like old millennial, we are like building this kind of like mindset. We will never buy a pack of egg to be delivered in 20 minutes. We will never do that, just because we know we at least can have an intuition of what's behind, which is like extremely resource inefficient, and then we're never going to do that from a consumer standpoint. So probably the barrier also comes from like this big wave, or which is maybe good in certain aspect of like a consumer which is more aware and more picky on this kind of product and services. So yeah.
There might be. On the other hand, it appears that they have profitable cities. So maybe there are some angles where all of this works. Probably volume and concentration of customers, but you need
volume,
you
need maybe volume, but also product, I think, can play a role. Maybe that thing can actually work for a certain kind of product, and this on the more sort of humorous side. Back in 2000, I would say 17, there were experiment of like a same day delivery in California for like a marijuana dispensary and alcohol store. So maybe that's the vertical. I don't know.
Yeah, right. That's an interesting take.
Awesome.
Nice.
So beside the party time and how we can build like a successful quick party, let's talk about some of the great insight that we've been talking about the work of Andre Ratterath from Early Bird Venture Capital in Munich. Basically, it's very interesting because he's working on the cross between venture capital and data, and he's showing how exactly data is also having a huge role in venture in general as an industry, which we kind of always had the sense that it needed to get done in some way. But Andre is really someone that gets the latest insight in data science and try to apply them in the world of venture capital. So for people that don't follow him, we really recommend this Substack. It's very interesting, it's very insightful. And one very interesting post that he made recently is basically examining the question when exactly startup should approach venture capitalists in general. And the outcome, the bottom line was that you should approach venture capitalists you should approach VC firm if you're sure that you can sort of return as a company 10 to 20 times the size of the VC fund that you're about to approach, which is an interesting take. I thought it was very, very cool. Maybe it's going to be a rule of thumb, but it makes a lot of sense actually, because it's a way of thinking in a way to actually build a very strong argument on how your company can actually not only become a unicorn, to be honest, but even go beyond that and expand way beyond national boundaries and showing, at least having an occasion to think deeply about the market in general and how big the company can be.
Yeah, totally agreed. That's the reason I wanted to share the post, because sometimes we need to remind not only to startups but to investors as well what's the average, what usually should happen, and it's a difficult market. So remember, Jack, only a small amount of funds actually return the right amount of capital to their investors. So it's a very risky asset. It's a very difficult market, and we need to take hard decisions. We need to really need to think that in the future, this company, this team, these people are able to return 10 times the fund. And as you said, you don't need to. The enchanted forest is full of interesting animals. Unicorns, yes, they were fashionable, but probably you need to think about dragons.
Absolutely.
As you know, the dragon is the startup that returns the entire fund. And you don't need to be a billion company to return the entire fund, but that's much more important than investing in a unicorn.
Interesting, very interesting. All right, Nick, great take. And with that, we conclude this week's episode of The Week in Italian Startup. We hope you found these updates insightful and inspiring. Be sure to subscribe to our channel and to Nick's newsletter for more exciting news, and see you next time.